the other short entities, I believe, are having the beginnings of what could be a spiritual experience heading into delivery month with massive open interest.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. In the midst of, wow, Andy, are we in the third biggest silver rally ever?
I don't know, Chris. It feels different than it's ever felt to me, and that's really one of the things I'd like to talk about tonight, is what's different. And, you know, it may be the third biggest on paper, but I'll tell you something. I don't know that I've ever seen a market that really behaves like this since you and I were at the Sprott Online Symposium just a couple weeks ago when silver was under $18. It's insane what's happening right now, brother. I don't even know what to make of it, but I'd like to talk about as we move on through this tonight. What I see as being really different, and there are several things that are, I think, worth talking about.
Yeah, well, and I know like you're excited there, Skipper. Well, although let me formally introduce, of course, Andy Schectman, the James Bond of the precious metals circuit, founder and owner of Miles Franklin. And yeah, Andy, like you said, it was interesting. Only 2 weeks ago, I guess, that we were at the Sprott show. And I remember I talked with Keith Newmeyer, and he said while we were there, he's like, he thinks we could see gold above 2,000 in a couple of weeks. Turned out to be right on that. And Andy, as I pull up the silver chart here, I'm looking at a 100-year chart. And I thought so, but I mean, really, before silver went up to $50 in 1980 and then again in 2011, I mean, it basically just sat there at a couple of dollars. So whether we hit those highs on this current rally, I tend to think that we will hit them and surpass them. But yeah, this is only the third time that it's gotten back into the upper 20s. So, and I mean, that's what we've expected. We talked for years, and I'd say congratulations to you for, ladies and gentlemen, how about a hand for Andy Schectman was right. I know every once in a while someone would say, oh, he's just talking about silver because he sells it. And then sure enough, not only were you correct about silver price going up, but the way it's going up, the reasons it's going up. And with that said, I will let you take it from there.
Thank you, Chris. I appreciate it. Yeah, you know, when I talk about the market moving up, it's not because I sell product or that I wish it to go up. I've talked about the manipulation of the metals market for many years, and I did. I got a lot of heat for it. There were people who would say to me, that can't be. Traders can't keep their mouths shut that long. The market's not manipulated. Why would you talk about manipulation? It only turns people off. Because to me, the market was manipulated, obviously. But more than that was, why was the market being manipulated? And I would try to focus on what was the behind the manipulation of the market. If we look at what's happening right now, some very interesting things that are happening to me center around the market feeling that it is not being manipulated any longer. And I'd like to talk about it for a minute. Normally over the years, so I used to give a talk, and I remember the manipulation talk anyway, I would pull a chart up from Kitco every Sunday night. And I did that for 200 straight weeks. And I would use that in my speeches. And I would show the Sunday night chart for over 200 weeks. I think when I was doing it, the last time I gave that speech, it was 196 out of 202 Sundays that the market would open up lower. You could bet your bottom dollar that on Monday morning, the market would be lower than it closed on Friday. I showed a chart from Dimitri Speck where he took 10 years worth of data and he compressed it into a chart. And that chart would show a waterfall decline at 2 a.m. Eastern, which was the AM fix in London, and around 10 a.m. Eastern, the PM fix, somewhere in that neighborhood, straight down. And this was a chart that comprised or compressed 10 years worth of trading. And every time the PM fix would come, as it would head into New York, the price would get smashed. I would talk about how options would be sold by the commercial banks. They would suck in the speculators, sell the options. And if we look at round numbers, let's say $10, $11, $12 silver, they would sucker in the speculators, push it really close to that round number, and within 48 hours of options expiration, they'd smash the crap out of it, step on its neck. The options would expire worthless. The commercial banks would collect the premium for selling the options, and then they would rinse, wash, and repeat. We talked about how every time the market would rally, gold and silver, the commercial banks would pile on the shorts and drive the price down, and then crush it. All of those things that I just mentioned are flip-flopped. They're not happening anymore. We see the price of gold and silver move up over the weekend. We see the price of gold and silver rise into options expiration. We see gold and silver rising for the first time I can ever remember. The commercial banks are not shorting, they're going long. We're seeing markets that open Monday morning up higher when 196 out of 202 sequential Sunday nights, Monday mornings, opened lower. We're seeing a completely different market, one that is pulling metal off the exchange. That is like your friend who you play poker with, who always goes all in, and it gets annoying and annoying and annoying, and you know he's full of crap, but you don't call him because you're not quite sure. What's happening right now is that the commercial banks are being called. And if I were a commercial bank, the last damn thing I'd want to do, and they're losing billions of dollars with the rally in silver, is be short heading into the last delivery month before the election, naked short. And I think you're seeing the commercial banks run for the hills right now. As JP Morgan has gone long, as the indictments from the Justice Department, the racketeering charges have been levied, the other short entities, I believe, are having the beginnings of what could be a spiritual experience heading into the last delivery month with massive open interest. And I'll tell you something, Chris, in everything I can see, and the icing on the cake, on top of everything that used to be reality now being the opposite, is the level of mainstream demand. We are north of 2,300 clients, brand new clients, since March. We have done nearly 4 years worth of business in 7 months. The mainstream participation is unlike anything I have ever seen. And every day I get phone calls from panicked people who've never owned gold or silver before. So I'll tell you, if there's one thing that I would say that defines where we are right now, it is a 180-degree difference in everything that's relevant and everything that matters in this industry that once defined the shortcomings and the shortfalls of this industry, now I think highlight what we should all be excited about. That there is a 5,000-pound bomb with a fuse that's been lit, and that fuse is I think going to propel silver markedly higher. If you told me gold would be north of 17 or 1800 by the end of the year and silver north of 45, I'd buy it. Simply just take the gold price right now of 2,060 or 70 bucks and divide it by 45. That's been the average gold to silver ratio for the last 150 years. That puts silver nearly double what it is right now. Not quite, but a little short of it, but nonetheless. puts it in the mid 40s. And I think we ain't seen nothing, Chris, yet. And I think this is just the beginning. And so I just wanted to touch on that, because everything that used to be that bummed me out about this market has now got me really excited, because it's behaving the way it should.
Well, I agree with what you're saying. And to me, it's not an accident that we're seeing it play out the way that it is. And I'm not trying to be a smartass in saying this, but Andy, I mean, you were part of a book where this was laid out, not only what was going to happen, but essentially the manner. And we talked about how, and we've talked about throughout this year, that over the past 9 years, you had demand crushed. And when silver was $15, I mean, I know you heard from them week after week. Well, I don't care about manipulation anymore. I'm tired of watching the paint dry. And you keep, all right, you leave it there, keep selling contracts. Every time the Fed prints or something, people buy and then get frustrated and throw in the towel. But if you look at a market price representing some balance of energy, and the thing being suppressed for as long as it has been, I don't think it's an accident that it took 4 years to go through $20, and then it has jumped up to $29 in the last 3 weeks. These aren't normal market behaviors. Nothing has changed. See, incorrect. I can't say nothing has changed with the supply and demand, except the demand has skyrocketed, supply has dropped off a cliff, and we saw that happening for a while and the price didn't move. But I mean, markets don't move like this when they're not levered. But we've talked about a short squeeze, and whether this is the ultimate short squeeze that blows out the COMEX, maybe that does happen in September. But I mean, it's happening now.
Well, I think that the investment demand, Chris, is, I guess I don't know how to measure investment demand in the overall scheme of things. One of the misconceptions with silver is that it's purely an industrial metal. And I think that's a great fallacy, in that before this is all said and done, its monetary status will outshine the industrial component. I'm not undermining or downplaying how relevant and important silver is in industry, but I think that the monetary aspect of silver is really, really resonating with people. And, I just think that the investment demand is unlike anything really that I've ever seen. And so, in fact, I'm quite shocked by it. I would say that 70 to 80% of every transaction we do right now is people buying silver. And gold is becoming, on many levels, too expensive for most people. And silver is a substitute for gold. Really, you could argue it just takes more of it right now. And there are those that will tell you that because silver is so depleted, because it's found in a form called epithermal, very close to the surface, the low-lying fruit, the big major deposits have been found decades ago. Keith Neumeyer says what's coming out of the ground is 6 to 1, gold to silver ratio. So, not the 120 to 1 we saw in March, or the 100 to 1 we saw in June, or the under 80 to 1 we see now. It's a trend reverting to the mean, like we knew that it would, but the demand is insane, coming from every level of people I talk to. Very few people only want gold. And I think it's still the buying opportunity of a generation. And I've been saying that on your show now since March. And I believe that. It's still the buying opportunity of a generation, because it's a depleted asset, has massive industrial demand, but it's also a monetary metal at a period of time when our currency is being destroyed. And not to mention, there aren't any other alternatives worth a crap. So it's not too late. And even though this is only the third time it's been in the upper 20s, It should be much higher. It's been held down for far too long. And in that environment, Chris, I would argue that technical analysis is a fool's errand. I'd also like to talk about one other thing, and I want people to think about this. One of the mistakes people are making right now, sitting on the sidelines, is recency bias. It's the little boy who cries wolf. Everyone's waiting for the next shoe to drop, for the market to pull back, for that correction to get back in. And it may happen. It usually does. But it may not this time, at least not for a long time. It may just run and then correct after it gets above 30 or 40. I don't know. I can simply tell you that on every single metric, from the very top, with all the supply shortages, from the mines and the refineries and the mints being closed at the beginning of the year, from the U.S. Mint coming out and saying they can only make gold and silver, not both, one or the other, and they'll pick and choose. And the Canadian Mint doing pretty much the same thing. From the massive demand, from everything that's happening around us, from money creation, everything, it's different. And I think people need to take a step back and realize that the game has been rigged, and the major rigor has been taken out of the casino. And with JP Morgan now actually net long and indicted on racketeering charges for manipulating this market, the sky's the limit before we see any sort of a correction. So people need to put the recency bias aside and look at what's coming, the trailing edge of the storm, if you will, as we head into the election. And I would simply say that the last time we saw a pullback was March. But what happened in March? Do you remember, Chris? You couldn't buy with $12 silver, an ounce of silver, quickly. And if you did, or if you didn't, you're paying almost $20 or over for anything you could buy. So with the correction came the fact that the physical demand overwhelmed all the supply in a matter of days, and premiums went from $3-4 an ounce to $8, $9, $10, $11 an ounce. So I guess all I'm simply trying to say is that if people are sitting on the sidelines waiting for a correction, I think it's really not smart. I think the only way to smooth out uncertainty is to cost average. And if you're sitting on the sidelines with dry powder, which does give you both the tools and the courage to take advantage of opportunities like this, you have to do it. And if you're concerned about it moving up too fast and being oversold, or overbought rather, just know that markets like this can go in overbought territory for a very long time, especially one that's been held underwater like a beach ball underwater for so long. When it finally pops up, it takes your face off. So I think that either the market continues to run and doesn't correct until it wants to somewhere down the road, or it does correct. And if it does, the physical supply disappears like it did in March and like it's done repetitively. So I think the best advice I would give someone right now, if you're concerned about how fast it's moved up and want to continue to add, is cost average your way in. Buy a little bit every week, or a little bit every other week, or a little bit every month, and you will smooth out the uncertainty curve. And it's better than sitting on the sidelines waiting for the correction, which I hear a little bit lately, and I think is the wrong way of looking at it.
Well, I get what you're saying, and I've been thinking about that a lot. And I mean, like you said, it is a really manipulated market, and by all means, there could well be a correction. I wouldn't be surprised in the least. I mean, you almost have to expect it on one hand, although it does raise a challenging set of decisions. If you think there's a correction, a lot of people were saying that when it crossed 21 and now it's up at 28. So what do you do then? So I like the idea of dollar cost averaging. In fact, I was pretty excited. I was going First Majestic September upside call option shopping today, which by all means is not in any way recommended legal financial advice, but just the kind of thing I do in my spare time. And we'll see how that goes. Although, Andy, you did mention silver as money. And appreciate you bringing that up because it's one of those moments of clarity. I'm glad that it was you bringing it up because I've realized my destiny as you were talking there just now. And, you know, I've always imagined like the best case scenario. I don't currently own a house. I think there's a real estate bubble. Yet, what I imagine what would happen is that maybe we won't ever see real estate crash in nominal terms, but in real terms, you know, I've always expected that the number of ounces it would cost to buy a house, number of ounces of gold or of silver that it will cost to buy a house will plummet significantly, which means I have a little time because my new goal, my new purpose in life, I want to be the first person ever to purchase a house by exchanging silver chopper Benz. I don't know how many silver Ben Bernanke helicopter ounces it's going to cost at that given point in time, but do you think we'll be using silver as barter in the near future? And how do you think that's going to go?
Well, I know that, you know, you always like to give me a hard time and tell me how old I am. I'm not that much older than you. I'll be 50 on August 21st in a couple of weeks here. So in 1980, I was too young to remember, you know, the last time silver was at $80 or $50. I'm not talking 2011. The reason I bring that up is that that was in the middle, 79 into 80 of the oil embargo and super high interest rates and what have you before the market collapsed, before the gold and silver market collapsed due to Paul Volcker raising interest rates to 18%. But my father told me that the local gas stations here in Minneapolis many of them would put ads in the newspaper saying, we will take a silver pre-65 dime for a gallon of gas. Now at $50 silver, that dime would be worth roughly $3.50 or more. And so, with, you know, gas wasn't $3.50 in 1980. It would have been a good deal for the shop owner. But moral of the story is that, yeah, you could, if all of a sudden the dollar really started to hyperinflate. You know, let's talk about that for a second too, real quick. In 2008, when the Fed bailed out the banks, you know, I've been talking stagflation. That's my prediction, is that you have a stagnant economy, you have rising unemployment, you have rising taxes, little or no economic growth, and massive rising prices. So anyways, into 2008, when the Fed bailed out the banks, that's exactly what they did. They bailed out the banks and all of the Wall Street buddies, and it trickled down into asset price inflation in stocks, bonds, and real estate. The mainstream didn't get squat, but the banks did, got enriched, and all of their assets went up. But this time it's different. In the past few months, $3 trillion has been sent out in checks to the public at a time when they're being paid to be unproductive and sitting doing nothing, which is really not good, because what you're doing is creating now massive inflation in the real economy. That money is going right into M1 and M2 in a massive expansion of the money supply. It's not just going into price inflation of assets, asset price inflation. It's going to go into real price inflation, translate into real price inflation with broken supply chains across the board. And I'm of the belief that, yes, you could see a massive hyperinflationary recession, hyperstagflation. And in that environment, no one's going to want anything dollar-wise. And yeah, I think you could see people accepting silver coins for things like a gallon of gas, or, you know, services, maintenance around your house, a boat, a motorcycle, whatever. I mean, people will be willing to trade things for real money, and not the you know, the worthless currency that is the U.S. dollar, and is becoming more worthless every day. So will we see it happening? If I had to guess, for a period of time, you very well may. Just depends how long they'll let the suffering go as the dollar is collapsing before they issue some sort of new, if I had to guess, digital dollar backed by gold to a degree, not convertible, with all of the gold validated by a distributed ledger blockchain. And, so will it happen? Don't know. I wouldn't be surprised if it did. And the question is, how long does it go for? Don't know. But I'd rather be in all of these what if scenarios. I'd rather have an out when others have none. And that's one of the things that you can be sure of in something that's been sought after and accumulated by, human beings for the last 6,000 years. So yeah, it's whether it plays out or not is another question, Chris. But I'd be glad to have it if it does.
Yeah, we will find out soon enough. And kind of like you mentioned before, I don't think anybody knows. I'd be cautious of anyone who says this is going to happen, or anyone who uses absolutes. I personally think we're in uncharted territory right now, and so I leave all possibilities open in the silver market, especially at this current time. Andy, real quick before we wrap up, are you seeing any difficulty sourcing product? Has that changed? Wholesalers still have metal. Andrew McGuire says he can't. In fact, that was another question today folks had. Andrew McGuire says he can't find wholesale bars, although I've heard from Rick Rule, and apparently so far they are still able to source things. So what are you hearing there?
I'm able to still source things, but it's much harder, and you have to pay much more. And as I've said on your show before, there is no bull market like a precious metals bull market, because the higher the price goes only strengthens people's grip on their inventory. No one sells. No one's going back into dollars to reap profits. If they sell, it's to build a house or to pay college tuition or whatever it may be. But no one's selling for profit to go back into dollars when they left dollars to buy metals for exactly what we're facing right now. So supply is an issue. In fact, I believe it will be the biggest issue. And, if I want to buy silver eagles and pay north of $6 for them before I make a penny and buy large quantities, I can. There are people selling them, but is that worth it? I don't know. I can tell you that every time I buy something new, the premiums go up. And in terms of the big bars, yeah, I think they're probably still available for a little bit, but I'll tell you what, I would tell you that you'll see a big run on them come the end of the month, as at least on the COMEX, as I think there's going to be an awful lot of people standing for delivery. I think there's going to be a lot of metal pulled off of exchanges, pulled out of COMEX depositories, and be put somewhere safe where it's not going to be traded at higher prices. So, yeah, I think we're going to see major supply issues. I've said it for the last month or two. I think it will define the market going forward, whether it be a retail level or all the way up into the very large COMEX bars. I think finding them will be the biggest challenge of all if this price continues to move the way that it's been doing.
Well, Andy, for people who want to find some silver before that COMEX September delivery cycle kicks off, I appreciate all the specials that you have shared on the show recently and making things available. And this week, I'm going to toss something into the pot. So for any order of 500 ounces of more silver that you can send to Arcadia at milesfranklin.com, this time I will send and throw in a signed copy of the paperback version of the Big Silver Short, where not only can you really have the whole thing laid out, but you get Andy's chapter where he explains what was happening in 2008, which is incredibly similar to what is happening now. And so far, at least what I've been hearing from folks is that they've really been enjoying it. And we have had some requests for the signed copies. So we'll throw that in as a fun special this week, Andy. And as always, I appreciate you joining me. And we'll look forward to checking in next week.
Chris, thanks for having me, buddy. And you know, it's nice to see all of the things that we've talked about, rooted in mathematics, economics, and logic, coming true. And I just want to thank you and applaud all the people out there who have listened and taken action. There's been a lot of them. It's been an honor to assist and help. We'll continue to do so until there's nothing left to sell. I hope that doesn't come for a long time, but thanks for having me. I look forward to dropping by every week, even if it's just to say hi quickly and let you know what's going on. And for your listeners out there whom I've had the pleasure of speaking with and doing business with, you have my sincere gratitude and appreciation. So, Chris, you have a good evening. Stay well, and I hope to talk to you soon. Look forward to seeing you here in Minneapolis in a few weeks.
Yeah, Andy, and some even further good news. I know you and I have talked about some option trading on the rally, and I actually recorded a call the other day with Market Chameleon. And for everyone who's been waiting for the next options call, it is coming your way now.